Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. And while we don't have any news from the CCP website just yet, it looks like the first bit of data is starting to be mined from the compression changes that CCP is planning to do. And I actually just took a look on the subreddit where CCP Swift in one of those threads mentioned that a dev blog is in the works and should be coming soon, detailing what their new plans are for compression. So I'm definitely looking forward to that. It's been a long time since I have been flying my Orca, which of course is going to potentially become one of those compression platforms. Other than that, I've said it many times before, I personally think that CCP is holding back a little bit on what they're planning for EVE Online to prepare for FanFest and to try to come out with a lot of information, build a little bit of hype. Just before FanFest, that's how they usually do it. They come out with dev blogs, information a little bit before FanFest so that everything can be discussed out in the open at the FanFest itself. So looking forward to all of that. It does mean that we can still expect a little bit of time of very low amounts of information when it comes to the development for EVE Online, and I think we'll see that reflected in the market. I personally am also at the moment in a wait and see pattern, hoping to find any information that CCP gives on where the game is heading. As always, we'll take a quick look at the new Eden store. That's something that is still happening, of course. They are coming out with new skins. I think this one is like for the Chinese New Year that they did one recently, and so we've got some Serene House skins. Yeah, those do sound like they could be orientally themed, so those are considered hot at the moment. And when it comes to the services, we don't see anything special. That means that I get to move on straight to the market, and as always we'll start with some plex and stuff, and that is coming in at 210. There we go. Let's get started here with plex. You can see a little bit of a bump, but honestly it's clearly not a breakout or anything like that. We got some volume increases that have increased the price a little bit. Was there like a sale or something like that that happened? I think so. I think I got an email from CCP about a sale. But you can see that very quickly this gets absorbed by the market and we start to move sideways once again. So we're talking 2.9 million for the sellers of plex in Jeddah, 275 million for the buyers. So that's definitely a little bit more margin than what we're used to. I think this speaks to the hesitation. People are starting to choose their positions, and we're starting to see a very slow spreading of sellers and buyers. If we look at what's happening with the player-owned trade hubs, 275 million for the buyers, and this is the same thing for the sellers. So this is really the range. A little bit more margin compared to the previous weeks, I think, because of that little bump there, but the trend is still very, very flat, and the market is basically waiting to see where the game is heading. The multiple pilot train certificate, I think, had some volatility on the chart, and ooh yeah, here's the sale. I'm gonna guess that it was a sale on the multiple pilot train certificate, considering the volumes here. All of a sudden 100 traded in a single day. That has clearly crashed the price from 1.4 billion down to 1.2 billion. So this is where the sale was. We're a bit above 1.2 billion for the sellers and a bit below that for the buyers. So very different dynamic here. Margin has completely closed on all of that supply that has come into the game, and if you do want something that's probably a little bit cheaper than 500 plex, you can try to hunt for that cheap multiple pilot train certificate at the moment. The skill extractors also see that little bump here in the volumes, just like with plex. I think this is basically the wave of whatever happened in the multiple pilot train certificates that moved through this entire segment. But for the skill extractors, very noticeably, you can see a little bit of a move up for the price, 5-day moving average above 20-day moving average, but it's so narrow. This is really just a range that the skill extractors are moving into, a little bit above 330 on the chart, 328 million for some sellers, 320 3 million for the buyers. That's a super narrow margin. And then a little bit of selling in JIDA pushes up above 330, where sellers are coming in right now at that 330 million range. So we're just going to hover, I think, right on top of that line for the foreseeable future until, again, CCP comes out with a little bit more news. The impact on the injectors. Here are the large-scale injectors that, well, have come off of their highs above 680 million in the months of October and November, early December. You do have to give a little bit back from one-year high points. I think that's kind of normal. Some people do decide to sell and take some profits, but you can very clearly see at the tail end as well that we are stabilizing a little bit below the 650 million mark. 652 for the sellers, 614 for the buyers. I'd say that's a respectable margin between the two. But overall here, to me, same thing. You can see how the 20-day moving average has completely gone horizontal, which to me is another indication that the market's like, all right, here we are, let's see where the game goes next. Small scale injectors have done their own thing, as is usually the theme, which is a little bit strange, you could say, for small scale injectors that are basically just a large scale injector but divided into multiple small scale injectors. But they really are their own market, I think, because they are more affordable. You see a little bit more volatility, and these actually went down towards the 130 or 135 million on the chart and actually bounced back a little bit. But and my expectation is that they will clearly settle around this current range from this point on. At least that's my look at it. 134 million for the sellers, 35 in JIDA, and then a 125 million for the buyers. Pretty normal margin. So another counter move, you could say, for the small scale injectors. Next, we have the daily alpha injectors that are creeping up a little bit, and actually you can see also that we have a little bit of a bounce. It could be some extra alpha clone activity that has found its way in the game with the Doctor Who event. I would personally not be surprised for that. Exploration is something that's very solo player friendly, and if new players try the game for the first time and get hooked by that, I do think potentially they are part of those that try and make that 40-45 million a day, get the daily alpha injector, and play EVE Online for free that way. Sellers are coming in at a little bit above 44 million in JIDA, couple just below 44 in the Tranquility Trading Tower, and the buyers are at 41 million. So that's just a 2-3 million margin between sellers and buyers. That's not a lot on something that costs 40 million. I think that shows that buying pressure that has gone up. I would not be surprised again that this is the Doctor Who event showing up in the daily alpha injector markets. And then we've got the hypercores that, well, are constantly hovering around that 300,000 mark, a little bit above, a little bit below, so a seesaw movement, but in general, we're just not going anywhere. And just like with the large-scale injectors, we did have a one-year high point that we had to basically absorb a little bit as well, that went to 330 million. So the sellers are coming in at 295,000, buyers at 288, a bit of selling pressure at the moment, but in general, I would say that this is in line with the market that's waiting to see where the game goes next. Next up, we have the minerals coming in at 815. There we go. As always, we will start with the titanium market. That's still recovering, you could say, from that one-year high point as well. A data point at 5.5 is something we hadn't seen in 6 to 7 months. Was of course a pretty damn amazing price. We are still coming down from that, but I would say we're still in a pretty good spot. 474 for the sellers of titanium. I'm not spotting too many billions of units in a single quantity order, so overall I think we are starting to settle at this price, and to see buyers still come in at 450 does give us a very strong case for titanium sustainably staying above 4.5 ISK, which in my opinion for high-sec mining and the most easy to get mineral in the game is not a bad price. Then we have the pyrite market that did go down quite a lot, counter to almost everything else in the mineral market. But you can see that finally, as we reached 12.5 ISK, buyers have started to come back into the market and have basically formed a bottom in pyrite. We're back to 1360 for the sellers and 1313 for the buyers of pyrite. Definitely a reverse movement, you could say, from titanium, where we had months where we could get 17.5 for pyrite. We all of a sudden had to give back a lot of that price. It's unfortunate, but obviously I would say titanium is a focus in ISEC, pyrite not so much at the moment. What could still be your focus then is Mexalon, and ooh, that's interesting, actually going up in the last couple of days to 75 ISK as well, on a little bit of volume. 74.64, so almost 75 ISK for the sellers and 68 ISK for the buyers. I think this does make the case if you're mining in HiSec, your focus is titanium and Mexalon. Next up to low sec, here is Isogen that once again breaks through the 125 ISK barrier. Very interesting and I think quite normal. Considering, of course, that we still have those old supplies, such as these 50 million units here, waiting at a 135, a 139, a 150, and then a big chunk at 225. But the pressure is on, and I think that sellers are starting to smarten up as well and are starting to spread things out more and more. And here you're seeing that upwards pressure that I have been expecting for months in Isogen. 131 for the sellers, 127 for the buyers, 1 year high point, and it was, in my opinion, only a matter of time for us to chew through the big sell order that basically stuck us below 125. It finally happened, and there we go. We are pushing straight through to another 1 year high point. And personally, I think it is not over yet. The normal regular orders that we should expect are maybe a couple million units, but definitely below the tens. So we still have to get through all of this supply before we finally reach the actual price for Isogen on active supply in low sec. I think it's gonna be even higher than this. Next, we've got Noxium, which is having a pretty good month at the moment as well. Is, I think, the most expensive Tech 1 mineral in the game, despite the fact that historically speaking Zydrine and Megasite have been harder to get and more expensive. But because it's low sec, you can see that difference, and that really does, in my opinion, mean that Isogen should go even higher. Almost 1,400 ISK for the sellers of Noxium, 1,342 for the buyers. Look how close they are, and this is far more in line with what you would expect active supply and demand to look like. 5 million, 3 million, couple 10,000, couple of 100,000. These are the volumes that are available, that are actually being mined and then brought into JITA at the moment from LowSec. And this forces those buyers to go right up to those sell prices if they want any chance of grabbing some Noxium through a buy order at the moment. Moving on to nullsec, we have the Zydrine market that is still slowly going down, is now below 1,000 ISK in a more structural way. 960 for the sellers, 916 for the buyers. Still a reasonable margin opening up here. I basically think that we are in a pretty stable situation in nullsec, which means that supplies of Zydrine and Megasite will be steady and plentiful, and that is now being shown here. It also maybe took them a little bit of time to fully absorb the mining changes that CCP brought to the game in December, I think, or was it late November? As a result, it took them a little bit of time to get back, to really being able to bring all the Zydrine that's available to the market, and that's what's happening here. We are clearly normalizing quite a lot. Megasite, a little bit of a different story on this one. I think it was on the patch that one moved up towards 800 ISK, and we're actually playing with another 1 year high point at the moment. 730 ISK for the sellers, 704 for the buyers. Now this may seem like, does that mean that there's a problem with Megasite or something like that? Well, Zydrine is still selling for almost 1,000 ISK. Megasite is selling for a bit above 750, and historically speaking, Megasite was more expensive than Zydrine. So I personally think that we are basically also seeing a little bit more normalization and a little bit more of the strength of nullsec in dictating the price for these nullsec minerals like Megasite as well. That is going to move it closer and closer to Zydrine. Then finally, we've got the Morphite market that not really willing to go substantially below 50k, but is trying to. 48,500 for the sellers, 47,000 for the buyers though. And yeah, why is the Morphite the one mineral that has gone down since the patch with the mining changes? Well, it is the all minerals have doubled in availability, and what are you going to try to bring everything that you can to the market? Is it gonna be titanium that's selling for 5 ISK, or is it going to be Morphite that's selling for 50,000 and up? Obviously, your priority for any group and any individual in nullsec is to get as much Morphite as possible, and this is why you do have that increased availability that has decreased the price for this good. Next up, PI, but first a quick drink. There we go. Let's open up PI, and that's coming in at 1520. Like that. Still no real news. Maybe the first tidbits of announcements when it comes to, or of data mining, I should say, when it comes to compression on chips, might boost demand for instance, advanced broadcast nodes a little bit, expecting that some more production of ORCAs and things like that might be in the books. But honestly, I think this bump here will already have been the prep for that. So we can see broadcast nodes flat at a very low point, 1.2 million for the sellers, just below 1.2 million for the buyers. That's not great. Construction blocks continuing to go back down. This is honestly to be expected. Price goes towards 8k, supply comes online, trying to sell at these better prices, crashes the price back down. 7,300 for the sellers and 6,800 for the buyers. That's still very, very low for a refined PI material. Historically speaking, in the current circumstances, it really does look like CCP is basically very happy with low PI prices, as they have said quite often that they want activity in the game to have value, and PI is very passive. Consumer electronics back above 7,000 ISK, 7.4 for the sellers, 6.7 for the buyers. So this looks like a good chart at the moment, but yeah, it's also a refined PI material. So even this upswing just brings it in line with construction blocks. It's still not great. One of the exceptions that is doing really great is coolants, still above 10,000 ISK, definitely at the high point of the range at the moment. 11,700 for the sellers, 9.6 for the buyers. That's very, very good. Even historically speaking, this has always been a price that I've been willing to dump as much coolants as the market wants. This is very, very nice. Cryoprotectant Solutions still slowly trying to recover from the event bump that pushed the price to 120k. 110 for the sellers, 104 for the buyers, and so this is obviously a pattern to remember. Once you can buy below 100,000 ISK, you can slowly stock up on the cheapest cryoprotectant solutions, and if you're lucky, CCP comes out with either an implant announcement or an event that drops BPCs for implants, and there you go, you've got your trade, you get your 20% profit in a matter of a couple of weeks, and it's obviously sustained for quite a long time, so all of those BPCs still have to be produced. This is very, very nice because you have a very clear buy opportunity and then a very clear and long sell opportunity as well. Enriched uranium not doing that well, but it is tied to fuel, so still not bad, considering that still just below 10,000 ISK for the sellers, 9.2 for the buyers as well. So historically speaking, enriched uranium was more expensive than coolants. It takes a far more rare planet to build enriched uranium on a single planet, but at the moment it's just not able to overtake coolants. Integrity response drones, a little bit of a move up here on this one. 1.7 million almost for the sellers, 1.5 for the buyers. A little bit of volumes as well. Like I said, maybe some players out there are expecting some more capital ship demand because of compression that is clearly coming, but I don't think it's a lot. I think it's really not enough to move the needle substantially on advanced PI materials at the moment. Mechanical parts tied to fuels, 1 year high point, 8,000 discs, still not great. Regular price 10k, 8,000 for the sellers, 7,700 for the buyers though, so that margin is way smaller. There's clearly a lot more demand for PI materials that are tied to fuels. Nanites did a little bit of a bump to 5,000 disc, 5.5 excuse me, and as expected we are already going down substantially. 5,250 for the sellers, 5,000 for the buyers. So this is the problem that all these other refined PI materials have, is that once the price tries to break out and even gains 500 disc, there's plenty of people that have been holding off on selling, that they can flood the market in a matter of days, and that's what we see right here. And it's the same thing that we're seeing here with construction blocks. Although this has been a little bit slower, we're clearly contracting in price substantially. Nano factories, again a little bit of volume and up in price, back above 800,000 disc, 825 for the sellers, 800,000 for the first buyer. Very interesting, does show a little bit more demand coming, but let's keep in mind we're coming from 600,000 disc less than a month ago, which was a 1 year low point. So having to make some gains here does make sense. Organic mortar applicators, same story. Last week, 1 year low point at 600,000. We're back above 700 for the average prices, 720 to 635. This is more like a bounce that's, just to take advantage of those super low prices. Recursive computing modules, a couple more months and that data point will be gone, but yeah, flat at a really low range, 860 to 772, not much to say on that one. Robotics tied to fuels, definitely a nicer chart, but let's keep the historical perspective in mind as well. Coolants is high for that historical perspective. Robotics, normal price, 100,000 discs, so we're still 30% below that range, even if the chart looks a little bit better. 69,000 for the sellers, 69,000 for the buyers. That is really that big difference. PI materials tied to fuels have way better demand than everything else. Self-harmonizing power cores, another bounce from a 1 year low point. 1.4 million for the sellers, 1.2 for the buyers. Sterile conduits, similar story, slight bounce from a 1 year low point pretty much here again as well, 850 to 800,000. Yukomi superconductors, just a random specialized material in here, 75,000 for the sellers, well 78 to 70,000. And then finally the wetware mainframes that are again down on even higher volumes. This really does show the hesitation in advanced PI materials. In some of them we get slight gains and slightly higher volumes on buying, but here in the wetware mainframes, for instance, we're down to 1.4 million for the sellers, 1.2 million for the buyers, where we had a summer that was easily well above 1.5. So this is still not great, but of course it all depends on CCP announcements, I think, at this point. And the expectation is in line with what we've been seeing for the last months and years. CCP really doesn't want to reward passive gameplay too much, and so if you're expecting a change to, for instance, large ship construction, expect nerfs to how much they need in PI, which is just going to put more pressure on these prices. Next up, advanced moon materials, 2240. There we go. Let's, as always, start with carbides. Here is crystalline carbonite. That is right back where we were a year ago. I think that trend is kind of confirmed here, that we've lost all the gains we've made over the last year. This can basically be described as a big bubble, especially when we had the first industry changes that came in April. You had a lot of volatility, very high prices. Then the summer and fall, you had a nice plateau where you kept like 25 ISK on a 150 start of the year, but right here at the tail end, I think on a far more stable nullsec as well, we have completely renormalized 142 for the sellers, 140 for the buyers, back below 150 at the low end of the range. Then we have titanium carbide for Caldari, also going below 150 ISK. This is even lower than the start of the year, but of course this chart was around here at the start there as well. 137 to 131, very cheap considering this full 1 year chart. Then we got Fernite carbide for Minmatar, same story, back below 150 as well, 135 to 131. Not a lot of demand, plenty of supply. And finally we get tungsten carbide for Amar, that is also back below 150, back where we started the year at 139 to 137. So this is a very big shift in my opinion, and throughout this entire period what I have noticed, or at least most of it, what I have noticed is a lack of volatility in the Take-Two ships, kind of hoping that these cheaper prices can finally bring that volatility back a little bit for active trading. Let's see what's happening with the metamaterials. Here are the photonic metamaterials after a big boom to 20k for photonic metamaterials. A little bit of overreaction you could say, or maybe that oversupply that's probably existing in moon mining and in nullsec at the moment is starting to take shape in the metamaterials as well. But we are clearly at a 1 year low point, 10,000 ISK for the sellers and below 10,000 ISK for the buyers. Cheapest metamaterials in a whole year, together with the cheapest carbides in a whole year as well. That should mean opportunities to build cheap Take-Two ships, which will hopefully allow some flooding and then some buy and sell opportunities as well. Next we have for Caldari the non-linear metamaterials. You can see here just about last week also 1 year low point at 17.5. A little bit of buying on that opportunity, but they haven't pushed the price back 20k. 18,500 for the sellers, 18,000 for the buyers. Next we have Minmatar, which is plasmonic metamaterials. A little bit better than most of the others here, I would say, above 17.5 for the least popular, generally speaking, Take-Two ships or ship lines, which is the Minmatar one. 18.3 for the sellers, 17.2 for the buyers. That's quite okay. Actually, one of those that I would say is not low. Let's see if Amar is doing differently. Terahertz metamaterials, yeah, back below 15,000 as well. 14.7 to 13,500. That's quite a big difference as well. That's pretty damn low. Not a 1 year low point just yet, but clearly very cheap. We'll see later down the line, of course, what this means for Take-Two ships, but first we still have some other advanced moon materials that have actually been struggling for most of the year and even the period before that. I think the start of all of these materials is also, historically speaking, a very low price. So here are fermionic condensates. You can see the pressure again back below 60,000 ISK, 61 for the sellers, 54 for the buyers. So we are going back well below average even for this bad year. Ferrogel just recovering, but again recovering from a period below 30,000 ISK, which is well below average as well. 32,000 to 30,000. Fullerites, 1 year low point yet again, below 700 ISK for the sellers, 662 for the buyers. And if you guys have been following me for a couple of years, you know that just a couple of years ago 1,000 ISK for the sellers of Fullerites was a normal price that was maintained for very long periods of time. Hypersynaptic fibers, pressure again as well. Where are those sellers? 9,100 ISK, buyers 8.5, so again well below average. Nano transistors, here's the pressure as well, back below 4k on some days. 4,000 for the sellers, 3.9 for the buyers. Our phenolic composites crashing down as well, so you can clearly see that that pressure is almost across the board. 1,400 to 1,300. And then we've got our new ones, pressurized oxidizers, but even here a first trend showing up, a first difference in the chart, and it is down, right? Downward pressure on the price here as well for pressurized oxidizers. 10,000 for the sellers, 5,000 for the buyers. Look at the lack of buyers. So this is clearly meant to be going down as well. Reinforced carbon fibers, not too noticeable a trend, a big volume spike that has pushed the price up just a little bit, but 12,000 for the sellers, 11,000 for the buyers. I think it will be absorbed pretty easily. And finally, we've got ceramic fibers that is just trying to stay away from the 1-year low point at 300 ISK. It's 355 for the sellers and 323 for the buyers. So the general story here is obviously prices under pressure, which will at some point also create buy opportunities, I believe. But I also do think that the main reason is the stability in nullsec, the lack of a big war, and then of course everyone is in a wait and see pattern. Everyone is probably taking this time, just like I am, to prepare in whichever way they can. And so a lot of moon mining is happening out there. Massive stocks are being built. So if you're buying here at the moment, I would say that you're buying for the long haul, not for some quick trading. But my hope is that these low production costs can lead to gluts in Tech2 ship production, which will eventually lead to players deciding, well, we're just gonna stop building and bringing those ships to the market to have the price go back up, which I think can be a catalyst for some volatility that does become tradable. So let's see what, if any of that is showing up here in the Tech2 ship market, coming in at 29.40. There we go. As always, we'll start with the Basilisk. That's, well, going back up, not a higher high just yet, but look at the volumes as well. This is definitely interesting. So less than a month ago, we could have probably bought these below 180 million. Now they're selling at 218, 183, and look at the lack of availability. That to me is definitely interesting, but we do need to see these spikes be sharper and higher before we can start to really decide that, all right, volatility is back and we can start trading Tech2. Cerberus, a little bit of pressure. How much below 200 million are the buyers? That's always the question to me. 210 for the sellers, 203 for the buyers, so that's still too early. Hopefully we can see, and you can see the supply last 24 hours, full page of Cerberi, which is putting this pressure here. If we can chew through these 200 plus sell orders, that's when I would be willing to jump in myself. Guardian, this one did know a higher high right here, right? A spike we hadn't seen in 5 months. That's not that bad. Pressure is on at the moment, but timing the market will still be very difficult. So personally, I'm still just hunting for the bargains. 190 million for the sellers, 171 million for the buyers. Let's see if I can get a 170 on the chart. You're buying very close to the 1-year low point already. I would personally wait a little bit longer. Then we've got the Hound coming in next. This one like gave us real hope, close to a 1-year low point, high point, excuse me, in mid-December. That was awesome. But since then, unfortunately, we keep bouncing on the 25. So I think buying opportunities are very noticeable, but the highs, 26 for the sellers, 24 million for the buyers. So we're never really breaking out just yet. Ichthyrsa coming back down a little bit, clearly pretty popular, very high volumes at the moment, 670 million to 625. Obviously, we'd want to see a below 600 million buy opportunity for the Ichthyrsa. It's a big investment, but we've also seen that even this move here can make you a lot of ISK. The Ishtar next, hesitating, right? Not going up, not making a new low, clearly still in the wait and see area. 194 to 186 million. Wouldn't blame you if you don't have an Ishtar just yet and you want to buy one now. You're buying below 190, which is still a pretty good and cheap price. So if you haven't done so, I would definitely consider a cheap Ishtar at the moment. Then we've got the Manticore. Unfortunately, we need to see buyers well below 25. They are not. 28 million for the buyers. So this is still on that pattern of not really willing to break out substantially just yet or to bring back volatility. Volumes, potentially though, could make that happen. The Munin flat on 200 million. That's not a sell, that's not a buy. I'm really amazed at how we can keep, stalling that point where we should eventually see more volatility than in the last couple of months. Here we've got the Nemesis, so that's a higher high, but not enough to really say here's the trend. But let's see how low we can go from this one. So we went up to 24 million for the sellers, we're down to 23 million for the sellers, still above 20 for the buyers. So for me that's probably still too early as well, although 20 million, it's definitely below the entire chart. Next we've got the Oneros. Again, volumes are to me a good sign, just need the prices to start to go crazy as well. 181 to 160 million, yeah, it's been in this situation for quite a while. If you want to buy cheap Oneros, you can do so. Do be warned, I would not put more than one Oneros in the basket at any one time, because the daily volumes are so low that's going to be hard to just sell more than one. The Panther, let's see, a bit of pressure, I would say, right at the tail end, which I think is normal considering the advanced movements. 1.2 billion to 1.1 billion. Purifier, going back down slowly, unfortunately. We're talking 25 million to 23 million, so that's another no. And then we've got the Scimitar. And that is good news in my opinion. Again, highest point we've seen in 5-6 months, and eventually we should see this. Here are the better volumes. We are talking about 213 million for the sellers, 194 million for the buyers. And if you bought here, or probably here, you could have bought well below 190 million. You're looking at a small trade and definitely a sell opportunity right now. And I am hoping that we can see more of this coming on these low production costs at the moment. I'm not sure if it is going to happen, but this is the sign basically that we're looking for, a real breakout that pushes the prices, including the 5-day moving average, above something we haven't seen in 6 months. Then we get the Widow, very flat at a pretty low price range, below 1.2 for the sellers, 1 billion for the buyers. Again, quite normal, I think, considering advanced movements. And then finally the Zealot, that's touching 180 yet again, 181 million for the sellers and below 170 million only just for the buyers. So you're buying around this range. If you want to get in on the Zealot, I think right now would be a good time to do so. And yeah, we have seen that before, right? Unfortunately, we haven't seen enough extra volatility to switch to trading mode in Take 2 just yet. So I'm personally still just looking for the best buys, charts like here, the Zealot, real 1-year low points, to slowly buy a couple of ships here and there, make sure that I can still buy later down the line, because again, in advanced movements, we are seeing cheaper prices, which could mean overproduction and even lower prices as well. But that's still my mode, basically that prep mode, that wait and see mode for what's coming next in EVE Online. Then we've got the Tech 3 ship market, that's coming in at 36.15. Man, I'm doing good today. Let's say 36.20. Here is the Confessor. Very big surprise to me, breaking out all of a sudden to 60 million, but here is your sell opportunity on this buy opportunity that I did obviously mention as well, because in this period Hecate and Jackdaw were already going crazy. Confessor is sellable at 62 million almost, buyers are at 55, and I think here you could have bought 42, 43 including taxes pretty easily. So you're looking at potentially a 50% profit on your buy from the Confessor. Finally, a move that to me does make sense, because we'll see here on the Hecate chart, they were still above 50 million as well, with a price bump up to 70 million. That is now being absorbed, but we're not falling back to 50 or anything like that. 55 million for the sellers, 52 million for the buyers. And obviously you can see the last couple of days, this is where all of the supply is, and that is what has helped the Confessor to jump up. And then now supply is being dragged into this one as well in the last 24 hours. Obviously a 60 million Confessor is not bad, and part of the reason is this. Here is the Jackdaw, substantially above 50 million for most of the last 3 months. This one is finally settling down to 50 million. 51 for the sellers and 45 million for the buyers. Still have a decent chunk of supply here that is going to keep these sell prices in check. I would almost say buying a jackdaw right now close to 45 million, which is down here, makes a lot of sense to me. The Confessor is going to keep dragging in quite a bit of supply before it gets back to 50 million. The Hecate is still well above 50 million. That should give the jackdaw breathing room to go up as well, and if this volatility continues, we might eventually see a spike like that here as well. So there is trades to be made in the tactical destroyer, but the big difference is that I'm expecting this vehicle to go nowhere. Let's see if I'm right on that. Yeah, it's going nowhere. That this one has completely decoupled from the Confessor Hecate jackdaw market. These three are clearly communicating with one another, right? High prices here, dragging in supply, causing supply dry-ups, causing high prices here. That does work, but despite all of that volatility and these tactical destroyers being 50, 55, 60 million ISK, this vehicle is stuck right here in a 45, 48 million range. 48.5 for the sellers, 44 million for the buyers. Trickling in, it's still coming, which to me is very surprising, but that is the situation. I would say the Confessor, you're obviously in your sell opportunity right now, and the jackdaw might just be in a buy opportunity as well. For the cruisers, here is the Legion, seeing a little bit of pressure, but I would like to see buyers close to 180 before I jump in. Oh, here we go. 192 for the sellers, 177.6 million for the buyers. Yeah, if you want to buy a Legion, even on a speculative run, I would say, looking at this chart for the last couple of months, it makes sense to buy below 180. Next we get the Loki, a little bit of pressure, but I'm not expecting too much just yet. 200 million for the sellers, 184 for the buyers. That's actually a little bit surprising as well. You could try to grab a Loki. 183, it's going to be around here on the mark. It's not that bad, and your sell opportunities do happen. Then we've got the Proteus, also seeing pressure from 200 million. We're talking 184 all of a sudden, and a 173 million for the sellers. Interesting. And then we've got the Tengu, seeing pressure as well. And this one is probably the most stable, 194. Well, buyers below 180 as well. I'm really surprised to see this all of a sudden in the strategic cruiser market that has always felt like a gambling market, easy to manipulate, and then really kept doing its own thing. All of a sudden we have a week where all three of them are down. Big margins have opened up between sellers and buyers, and I would honestly say you could try to pick one up for a buy order on any of them, and you should have a sell opportunity later down the line pretty easily on any spike, considering the chart that we've seen in the last couple of months. Big change in the dynamic in this market since losing a strategic cruiser no longer costs you skill points. I do think it will have had a very big impact. We'll see in the upcoming weeks if I'm right or wrong on that. And then finally, we have an extra product for the week, of course, coming in at 41.40. 20, yeah. 21.20. And, well, let's take a look at the mining ships. That's been a while. The patch has been a while. Let's see if there's any lasting impact on these. So we'll start with the mining barges. I think mining barges are Tech 1. So let's start with these. Here is the Coveter. Well, you can see here, since mid-December, we moved from below 40 million to above 40 million. 42 for the sellers, 39 million for the buyers. Still quite affordable, but you can see on the volumes as well that they have gained in importance when it comes to mining. Procurer actually down, less popular all of a sudden. I'm gonna guess that, yeah, the move from defense to yields plays a very big part here all of a sudden in what's being chosen by most of the player base. 39 million for the sellers, 35 million for the buyers. And then we've got the Retriever that has clearly gained a lot in popularity, climbing to 48 million for the sellers and 43 million for the buyers. Quite normal, I would say. the solo aspect, and even in fleets, I think the Retriever will have its place at the moment. Are we seeing something similar in the Exhumers? I'm actually expecting an across-the-board increase because they're the better yield, but tank is still pretty important. So the Hulk is basically absorbing all the volatility, spiked up to 350 million in December on the actual patch, and is now starting to move down. Volumes are still quite high, and prices to 58 million for the sellers, to 31 million for the buyers. That's actually reasonable on this 1 year chart. So maybe the Hulk is being used, but more in the far larger organized groups where they can defend things like Hulk, and this price has normalized because solo players are not going to grab a Hulk that's way too easy to gank. Mackinac might be a little bit more popular, not by too much though. So again, the December spike is here, up to 400 million ISK for a Mackinac. We're down to 273 for the sellers, 261 for the buyers. That's clearly a little bit more buying pressure on this one. And yeah, you're maybe paying a bit of a premium compared to most of last year, definitely compared to the average. So the Mackinac has gained in popularity. The volumes are of course quite crazy. And then the one that I thought would gain the most is actually the one that has lost. So here's the Skiff with the November speculative bump up to 280 million ISK, but then actually a loss of volumes and a loss of interest to a 1 year low point at the moment. 176 million for the sellers to 162 million for the buyers. This is a very big surprise that the tankiest but the lowest yield has lost that much in popularity all of a sudden, and the mid-range, the Mackinacs and the Retrievers are the most popular ones at the moment. Let's see what the Orca is doing. I don't think that's going to be a pretty picture, especially considering that it did not get the compression that we were expecting in December. Alright, well, this does show that production costs for large ships should be a bit of a problem. We did get a dip in the Orca here in December, but it's already back above 1.75 billion ISK. 185 billion for the sellers, 1.74 billion for the buyers. So the Orca is back in the very expensive territory. We also have a little bit of a bump at the tail end, maybe on expectations for compression to finally make it into the game, but I thought we'd have a more sustained lower price for the Orca. Clearly that is not the case. Volumes are down a bit, but in general I'm surprised by that, because almost everyone will have moved to the mining barges and the exhumers, and so seeing the Orca be able to defend this price is probably not a sign of popularity, but just a sign of how expensive it is to make large ships in the game at the moment. And there we go, guys. That is this EVE talk. Thank you very much for watching and listening, and as always, I'll see you next time.